Great headline, great headline, heads above the rest. Banks want Fed to iron out Maiden. If you're a heavy metal fan, you get that one. If you're not, Colin Barr is going to explain it to you. Colin, this story, you got to keep it simple so that I can understand it.
Yeah.
But there seems to be something going on here that I don't think I like very much. Why don't you break this one down for us a little bit?
Well, so there was the bailout of AIG. I don't know if you're a few years ago.
I seem to recall something of that,
A few things went bad, and so then AIG got bailed out by the Fed because they didn't want the world to didn't want the financial system to collapse.
Right.
And so
to the tune of 180 billion.
Right, to the tune of, well done. So one of the things that they did is that they they set up an investment vehicle called Maiden Lane 3, and they made a loan to it so that it could acquire these assets from AIG, so that AIG wouldn't have to continue to fork over cash to these banks that they were trading with. And of course, AIG didn't have that cash, so that was sort of a
and it was a big loan, right? It was 25 billion? Was that
24 billion loan, right?
Billion?
And so it was very controversial, of course, because what happened was that in this transaction, excuse me,
sorry.
One of the things that the Fed did was that they paid off the banks that were trading with AIG at 100 cents on the dollar.
Yes.
And this was at a time when the economy was sort of in free fall in the financial markets. Nobody wanted to touch anything. And so a lot of people argued at the time, well, they shouldn't have done that. They should have forced the banks to take a lower price.
So now you fast forward a couple of years, the New York Fed's holding on to these assets.
Right.
Markets are doing better, a lot of things are doing better. Bond market yields are down. Banks are looking for yield, as they say, and now they're sniffing around the New York Fed again, saying, hey, maybe we'd like to buy those assets.
Yeah. Is it safe to sort of sum it up this way, too, that the banks that bought credit default swaps, basically betting that these assets would stink,
turned out they were right.
Turned out they were right, and they got paid off on it.
And now that those assets have tumbled the way that they bet, they want to go in and buy those assets and then sell them to somebody else.
Yeah, no, life has a sick sense of humor sometimes. I mean, one of the things that we can look at this and say is that the Fed did this thing because it thought the system was going to collapse. And I think that no sane person would argue that there was an alternative open to them at that point, right? You can't just stand back and say, oh, wonder what's going to happen, right? They did that with Lehman Brothers and it didn't exactly work out, right? So, the Fed did have to do this. The Fed's going to make a profit on selling these, it would appear, right? I mean, we have a graphic that goes with the story today that shows that the fair value of the assets. I mean, these things are worth 37 cents on the dollar. You know, I'm not suggesting that anyone should go buy these for their account at home, right? This is not this is not great stuff. But the Fed protected itself when it made this loan by they paid 24 billion for assets that at the time had a market value of 27 billion, and a lot of these things have been performing. They've been paying principal and interest. So now the Fed's loan is down to 10 billion. And 9 billion, and the market value of the assets is 17 billion, right? So it appears
if they sell them, we could turn a little profit.
Yeah, right, and that's sort of the story of the whole AIG bailout. Is that not that this makes everybody look great, or that this is a proud moment that we can all talk about how boy, that went just great, right? I mean, no one is saying that, but in fact, the way that the Fed said that this was going to play out when they made these loans at the time has turned out to largely be true, right? Which is so. You can always understand the thing where people are angry at the bankers, and there are a lot of things that the bankers did and that a lot of people did before the crisis that were not really ideal, and that we're all going to spend the rest of our lives paying for in one form or another. But it's sort of hard to jump up and down on the Fed's head for this one, I have to say.
This is sort of the coda on the whole story.
Right.
It is.
Don't worry,
right.
Colin Barr. We will try. Thank you very much for coming on. Appreciate it.